Alright guys, welcome back to MMGinvest. This video, there's a lot to talk about. I can't keep up with the news. It's like things are just quickening and quickening. I cannot get a break. I'm trying to find some more like highly speculative penny miners that might, be a nice lottery ticket right now, and I just can't get a break. Neither with crypto. It's just, and it's July. Usually things are boring. Markets aren't moving. It's the doldrums, right? Not these days. All right, so I'm gonna do a quick recap of major economic events with the interest rates and the Fed, and then I'm going to talk about recent news, which you can't miss. It's really important, even for crypto. And I think, listen, this isn't financial advice. I could be completely wrong, but I really think this is it. I think the clock has run out. I think the train is leaving the station for gold and silver. I think the manipulation, they can't suppress it anymore. I'll talk about that as well. And there's just global macro things happening that are just going to shoot metals to the moon. It's not just the Fed and the stock market and Trump, and we'll get into it in a second. Let's do the recap. Also, because I want to load up on gold and silver mining stocks personally, I need more money. So I'm going to give a 10% discount until Sunday night, Monday morning at 12 a.m. I'll post the promo code in the comment section, and I'll pin that. I will also post the promo code in the free chat groups, and the links to those are in the description of this video below. All right, let's draw. Let me go to another gold chart here. I have many. All right, here's a little bit of history. So NASDAQ bubble popped in like 1999 till 2001. Gold broke out into a bull market mainly because of Alan Greenspan, and it went into a 10-year bull market. So for those people who say manipulation will keep it down forever, it won't. They can't literally do it forever. Also, the London fix, I mean, everyone knows they don't have the physical to back it up. Also, when you talk about manipulation, you're talking about the futures market. You're not talking about stocks and stuff. You're talking about the futures market. It's a highly derivative market, paper market of the underlying asset. Now, also, recently, another bank was caught. Which bank was caught? I don't know. I posted it. It's in the chat groups. I posted it, I think, last week. Either way, they're losing control. How do I know? Well, the price went above 1,400. Gold hit an 8-month high. 8-month. And it's the largest move in like 8 years. Well, yeah, I mean, the metals have been in a bear market for like 8 years now. This is a weekly chart zoomed out. Also, I mean, huge cup and handle, and my blue equilibrium line crossed with the 200-week moving average. And I've been warning you guys for a year now, when those cross, it's going to shoot the price up. It did exactly that. All right. That's just technicals, charting. The fundamentals are screaming buy. All right. Let's get back to a little bit of history. So let's look at the S&P 500. All right. Let me take this to a weekly chart. Here's 2009. Here's the bottom, the crash. The Great Recession, right? Alan Greenspan kept lowering interest rates since the NASDAQ bubble. What happened? Those low interest rates created a bubble in the housing sector. A bunch of people were given loans and they couldn't repay the loans. And they give them ninja loans. You don't have a job, nothing. Just show up and we'll give you a house, a $300,000 house. And everyone thought the housing market was just going to go up for infinity. Also, the government backed those loans and forced the banks to give out loans, right? Everyone should be able to afford a house in the U.S. Well, guess what happened? Everyone just got slaughtered, and they lost their homes. Their homes went negative equity. They went bankrupt, and they were thrown up. All right, and it destroyed the economy. The entire U.S. economy almost imploded. It was literally like hours and days away from implosion. But Ben Bernanke came, who was the new Fed chairman after Greenspan, came and saved the day by printing trillions of dollars, pumping the banks full of money. He bailed out all the banks, the money market funds. It was basically a run on the banks, and stopped the stock market from crashing. And the Fed also bought up tens of thousands, if not hundreds of thousands of homes, something like that. I don't know exactly, so don't quote me. And it stopped the U.S. from going into a Great Depression, 1930s style. And that was the wrong thing to do. They should have let that happen. Because the economy back then was in a bubble as well, just like it is right now. Except the bubble now is like, I don't know. It's at least 10 times larger. As you can see, the stock market's 10 times larger. So all of that easy money, right? Cheap money. Now you guys have to understand, when they print money, what happens? They give the money to the banks, like free money to the banks, pretty much. The banks lend it out. Because interest rates are like zero, and they were zero for about 10 years now, anyone could get a loan. Corporations could get a loan. Entrepreneurs could get a loan. Anyone could get a loan. And what that does is, it's great for expansion. The problem with that is, the money is so easy and so cheap with no interest that people take that money, they invest it in stocks. Corporations borrow money and they buy back their stocks. Entrepreneurs get all this money and they build businesses, and after a while it just creates malinvestment. And that's what cheap money does, because it's just what it does, because it's so easy to get. If the interest rate was high, the banks wouldn't just give anyone and everyone money. And then people would have to be responsible and would actually have to show the banks that they could actually repay the money. But with low interest rates, nobody has to do that. Everyone's high on cheap money drugs, and the money goes into the stock market, and the stock market goes to all-time highs. It's a giant freaking bubble. Car prices go up. Home prices go up. Home prices are back at bubble territory. Car prices are just through the roof. Student loans through the roof. Everything through the roof. Everyone's got credit card debt now. The private sector has more debt than ever before, the U.S. And the same has happened globally. All right. All right. So let me start drawing. Let me draw here. All right. At December 2015, For the first time ever, they tried normalizing interest rates. So I drew that little circle. That's when they started normalizing interest rate. They did the first interest rate hike from 0. 25 basis points, which is like 0.25%, which is absolutely nothing. Normal interest rates are like 8% or higher. And they went from 0 to like 0.25. All right, okay? Stock market tanked at the end of 2015, beginning of 2016. Tanked. Plunge protection team came in. We were starting to get the elections. The market was starting to get a little excited about Trump. What if he wins? Because he's pro-free. He's pro-free market, pro-tax cuts, pro-stock market, right? So it went up a little bit. And then we had the elections. Trump won right here. And then ever since then, the market started pricing in tax cuts for corporations. And they got excited about Trump fixing the economy. During the meantime, right, Trump was complaining about this too, that the Fed started raising interest rates, because Trump's not an idiot. He knows if they keep raising interest rates, the banks stop lending, then the cheap money goes away, and then the stock market doesn't get the money. So then the stock market dumps, and then guess what? We go into another Great Depression or hyperinflationary end of empires type scenario, right? So the Fed started normalizing rates. Boom, boom, boom. We're getting to 3% interest rates, and the economy can't handle it. Or, yeah, the economy can't, and the stock market definitely can't. So then the market gets real volatile and starts dropping hard right about here, right? And then I don't know what happened, and then it went a little higher. So there was some good news, tax cuts, maybe it was back up here. And then, again, it tanked. Now the Fed, what happened here was the Fed said they stopped raising interest rates. They said, we're just going to put it on pause for now. And we're going to, and you know, during this time, they also said they're going to let the balance sheet, all the debt, run off slowly, like let paint dry. So the market is pricing this in, and they're like, well, the market's not stupid. They know the economy, and the bond market as well. The economy can't handle can't even handle 3% interest rates. Because what happens is as interest rates go up, the debt comes due for the private sector and the government and the pensions, all the entitlement programs. The elephant in the room is the outstanding debt for the country and for everything. It's private sector debt, which is record highs, and government debt, record highs, that literally mathematically, basic math, you can't pay it off. All right? And you might hear some landscapers outside. Anyways, so you can't pay it off, right? So the Fed right here capitulate. Well, first they capitulated and said, we're going to hold off on rate hikes. So the market went higher. Then the market tanked again. What did the Fed do? They said, all right, well, we're going to stop. We're not going to raise rates for this year. And we might. Well, okay, that's what they said here. So then the market rallied. Again. Then the market started dropping again. What did the Fed just do recently in the past month? They said, we're thinking about cutting rates because of the global slowdown, global economy slowdown. Now you have to remember, you have to think of the world as well. China and Europe, same boat. Japan, same boat as the US. All right? Russia, not really. It's weird. Like, they're like the only ones without debt, and they're not even printing money. All right, so we just went and hit new all-time highs in the past 2 days. Because the market is pricing in the fact that the Fed is going to cut rates. Now, in the since Trump keeps tweeting and everyone keeps saying, mainstream media, it's the best economy ever. The economy's doing great. And everyone kind of agrees. It's a little bit better. But this is a temporary high. It's not real economic growth. It's just driven by cheap money and malinvestment. It's not driven by manufacturing. Manufacturing has been dropping. So there's less manufacturing jobs right now than when Trump came into office. And, you know, the same with Obama. It's been falling for decades because China's stolen all, well, didn't steal, but all the manufacturing went to China and abroad. Because America can't compete on a global stage because of high taxes, endless regulations and red tape, and the debt and the large government, right? So, as a corporation, the U.S. as a corporation cannot compete with emerging smaller competitors, other countries, right? Like China and Russia right now, okay? Europe's in the same boat. This is Western civilization, technically. All right, so that's what we're looking at right now. We're kind of looking at the stock market melt up, which I've been saying for the past month or so. And that's because the market's pricing in rate cuts, and then they're going to start pricing in QE. Now, this is a huge problem because the bond market, I feel like, has figured out. I'll talk about bonds in a second. The Fed is stuck. They can't do anything besides lower rates and print endless cash. Why is that? 1, the trade deficit. 2, if this stock market crashes, I mean, it's going to be so painful. It's going to be worse than the Great Depression. Like, I don't know what's going to happen. It's scary. 3, they can't normalize rates. It blows up the economy. And the easy way out, it's not to default, it's to actually give everyone their entitlements, all the free shit that, you know, politicians have promised to the baby boomers. They're going to give them their checks, right? But it's just going to be worth less and less and less because of inflation. So what they're going to do is they're going to just keep printing. Because it's slow and it manipulates the stock market higher. Venezuela's stock market kept going higher and higher, right? While they were starting to go into hyperinflation. And, you know, you already hear the central bankers say that zero rates are good. They're saying their 2% target is starting to get moved up to, 2%'s the bottom now. We're going to go to 4% inflation. In reality, that's like, who knows, 8%, 10% inflation. That's pretty much 10% price rises on most goods you buy. So you'd be getting a pay cut 10% year over year. Your standard of living drops 10% every year. And it's going to get worse with time. It's going to be 15%, 20% eventually. And, All right. So the Fed is stuck. When the stock market figures that out, the stock market's going to tank. And if it doesn't, the bond market's going to force it to. And your pensions are going to blow up. And it's going to be Armageddon. Like, it's going to be really bad. 2008 and 9, cakewalk compared to what's coming, I'm telling you. So, and then you're going to get like a hardcore lefty in office, right? And then it's just the end. The food lines, who knows, civil unrest. All right. I'm sure they're going to start a war because, I don't know. They could blame it on that. I don't know. Listen, all right, so that's what's been happening. And lately, Trump's been forcing the Fed to cut rates because he knows that's the only way he'll get reelected. Trump's plan, he just elected to the Federal Reserve Board. There's like a board, it's like 12 people or something. A gold bug. Basically, this lady, Judy, what's her name? Judy Shelton. She wants to bring the dollar back to a gold standard. The problem with that is they can't, because there's a trade deficit. And that's why we have huge tariff wars right now. Not just that, it's economic warfare. And lately, things have been getting a little sketchy. I'll talk about that in a second. Also, the dollar used to be backed by oil and the Saudis. Mike Maloney did a great video on that. I suggest you watch that as well. And that's come to an end, mainly because of Russia, China, and other Middle Eastern countries like Iran. And Europe just recently went behind the U.S.'s back because the U.S. has sanctions on Iran. And Europe just made another sort of SWIFT system where they could transact with Iran and, you know, circumvent the U.S. International, like, trade SWIFT system, right? And basically, I mean, the U.S. is losing the world reserve currency status. China and Russia have been doing the same. And Russia recently said they're going to try a gold-backed cryptocurrency, which is very negative for Bitcoin. I'll talk about that in the Bitcoin video, which I'm going to make right after this video. So stay tuned for that. That's going to be fun. Yeah, in China and Russia, they're going to go to a gold standard, which will force the U.S. to go to a gold standard. And it'll also, the U.S. will lose world reserve currency status, and the dollar will tank, like, overnight. Which will also be like inflation, right? And the gold and silver is going to go to the moon. All right? And that could happen, like, over a weekend. Gold, I mean, it's dropped down to like 1380, just shot right back up yesterday. Like the biggest volatile moves in like years. So something is definitely up. Now, if gold starts really rallying, it's going to spook the stock market. People, because everyone knows if gold's going up, something's wrong. Because the smart money is buying and anticipating something bad happening. It could be anything from war to stock market crash, something, right? And smart money's been buying, guys. Great video of the new board member. I posted it in the free room chat group as well. This is the private group. Trump's Fed peg Judy, yeah. Bunch of articles. Alright, this elitist. She was the IMF chief, right? International Monetary Fund. She was just elected to be the new ECB chairman to replace Mario Draghi. So the the Central Bank of Europe. So she's going to run it. And she just came out and said negative interest rates benefit the global economy, says IMF chief Christine Lagarde. I don't know how negative interest rates can affect the global is positive for anyone. First of all, you get negative return on investment if you hold government debt, which makes no sense. On top of that, there's inflation. Why would anyone hold government debt? So they won't. So what happens is the central bank has to print endless money to buy their own debt, and then you get inflation, massive inflation. And also negative interest rates, if it destroys people's savings. And what builds a strong economy? It's people's savings. So people who have savings, what they could do is they could invest it into companies, and then companies grow. As companies grow, they hire more people, they create more products, and then the economy flourishes. Or you know, if you have savings, you have opportunities. You could build a business, hire people, right? Well, if you have negative interest rates, man, you're forced to chase high yield and high risk FANG stocks. That's what causes the stock market bubble, guys. Or you keep it in the bank and it loses value through inflation every day, day after day. You can't buy government debt and park it there because it loses value. There's negative yields. Can't keep it in bank CDs, negative yields. So it destroys people's savings. And it makes life more expensive. I just talked about that. So retarded these Keynesians, but they're not, listen, they're not that stupid. They're just evil and they want to stay in power. Alright? That's all it is. These people are, they're pillaging. That's all they're doing. And they're evil. Like, evil. HP and Dell and Amazon join manufacturing exodus leaving China. So, a lot of countries are becoming protectionist. Well, China's trying to create the new Silk Road, which is a trade route from China through Russia into Europe, through India into the Middle East, and then into Africa. That's why they built all those roads in Africa, and they're being imperialist with Africa as well, indebting them and then taking the resources. So China's new world superpower, really trying to be. And I don't know. That's a whole separate video. I don't want to go off on that tangent. So something weird's going on. I posted this in the chat groups. This could be nothing or it could be something really big, right? If any war breaks out or any craziness happens, I mean, metals are going to go to the freaking moon, like, fast. Like, all-time highs within, who knows, a month. Like, I don't know. Because once something like that happens, any war, actually, any new big war, these mining stocks are going to take off, like, hundreds and thousands of % as gold rallies to $2,000 an ounce, like in a week or a month or something. All right, that's what I think will happen if anything big bad breaks out. Yeah. So oh yeah, all right. So the U.S. economy just entered a record-shattering 11th year of expansion. So the U.S. economy has been in the longest expansion in history. So it's going to correct. But they're really trying to make it go higher so Trump gets reelected. It's just like, let's say there's a stock market meltdown because the Fed starts cutting rates all throughout 2020. Trump gets reelected. And then, man, oh man, is it going to dump. And it's going to dump really hard. Unless there's really good trade deals or something. I don't know. But either way, gold and silver's probably it is going to keep going higher because the stock market might keep going higher and higher. But that's only because the Fed, right? And low interest rates. And here's the deal. PE ratios, these companies, their earnings at some point are going to start falling. They really are. The American consumer, it's a consumption-based economy, and a service sector job economy, which is the worst combination you could ever have, because the U.S. as a whole does not export anything to the world besides dollars. That's why when the U.S. loses reserve currency status, those dollars all around the world, China holds 1 trillion or more, it's going to come all back. All right? So, where was I going with this? Service sector, consumption-based, right? If the U.S. private sector is tapped out with debt and they just can't borrow any more money, the bubble starts deflating because these companies' earnings and revenues is just going to drop. Now, the global economy, Europe and China, they're in pretty bad shape. That's also going to take down the US eventually. For the temporary short term, yeah, money from China has been flooding into the US stock market, including Europe. Oh, there's freaking tariff war now beginning with Europe and the US. I didn't look up any news articles, but out of the G20, that's the new tariff war. I think Trump's gonna, and Trump backed down on China as well. He backed down. So nothing really changed. So which is, this shows weakness. Of course they're spinning it like it's a good thing, but it's going to be a temporary high as well for the stock market. But that's another reason why we hit all-time highs in the past 2 days for the stock market, besides the rate cuts that are coming, which the first rate cut is this month. So I'm saying I think this is it. The train is leaving for gold and silver, guys. And they've been artificially manipulated down for 8 years. So the explosion in price is going to be huge because the real supply is very, very low. A lot of mining companies went out of business. Okay. And a lot of silver has been used for Tesla car batteries, solar farms, like the largest solar farm, Saudi Arabia. Each like square foot or 4 square foot an ounce is used. Bitcoin mining rigs, computers, TVs, all use silver. The medical field, it's been using crazy amounts of silver for bandages and everything. There's probably not much silver left. And the gold to silver ratio, let me show you. Let's take a look. I actually haven't looked at it in a long time. So the gold and silver ratio, historically, is... Historically, it's somewhere around 1 to 16. So it takes 16 ounces of silver to buy 1 ounce of gold. Right? And where the hell is it? I gotta type it. Hold on. Hold. Alright, here's a weekly chart. Holy crap. Alright, so it's at 92. What did it hit? It hit 90. Wow. It hit 93, the ratio. So it takes 93 ounces of silver to buy 1 ounce of gold. So silver, I mean, guys, some of these silver mining stocks, they're gonna do better than like ICOs during the crypto bubble in 2017. You guys need to go to my website. All right. So every time it peaked out around 80, 82, the ratio silver to gold, the gold and silver market went into a bull market. It not only peaked out above 80 and 82, it went to 92. So there looks like they're suppressing silver to keep gold down, but it's eventually going to break. And when it does, and this could break anytime, guys, silver is going to take off like a rocket ship. Right now it's below 15 an ounce. We'll take a look at a few charts. All right. So there's that. That's another indicator, huge indicator. I posted a gold chart. Right now it's pulling back. Right now it's at 1418. And if 14 doesn't hold, the next support line's at the 38.2 fib retracement at 1380. If that doesn't hold, and this is a 4-hour chart, by the way, then the 61.8% might hold on gold. For right now, today is July 3rd, all right, noon, Tuesday. So I don't. I honestly, guys, I don't know how far it's gonna pull back, but I guarantee you it's not going below 1350. I am very confident it's not. I hope it does, but I doubt it. I really don't think it's going below 1350. It might it might go back to 1380, and that's it. Like, that's your last dip buying opportunity. All right, and who knows what's going to happen over a holiday weekend. Holiday weekends are very dangerous for the stock market, especially with all these global macro tensions between the U.S., China, Russia. All right, what else? All right, so the dollar tanked, by the way, in the past week since my last video. So Forex, you know, they're waking up to reality. And it's on major support on the daily here. Bounced off my blue equilibrium line, major support. It's back above the 200-day moving average. But it's not going to take much, guys. And once it breaks below the 96 handle, that's all she wrote. Then the dollar's going to start dumping hard. Also, gold and silver, it's like, it's in some countries it's all-time highs already for other fiat currencies. The dollar is the strongest fiat currency right now in the world. But when the dollar starts dumping, that's another reason why they're going to lose control of the gold and silver market, and they're not going to be able to stop it from, you know, going to new all-time highs quickly. All right? So, what else? The bond market. Very interesting. Also, volatility index, the VIX, it's back down at all-time lows. So, what happens when the VIX falls too low? Volatility picks up on the stock market, usually because stocks are dumping hard. So, that's another indicator. It's telling me something's coming soon, all right? Something big. But the bond market, the 10-year yield, this is fascinating. See, the bond market saying something is really wrong here. It broke below the 2%. The 2% for the 10-year yield. So, let's go back to the yield curve, right? Which has predicted the last 7 recessions accurately. Within like a 6 to 18 month window span. So once the yield curve inverts, you know, shit hits the fan. We are below the red line here, which is yield curve inversion. And like I said, it predicted the last 7. So historical 10-year to 2-year spread. We're right there, down by the red line. So this is what's interesting. The 10-year. So let me show you. Right before the mortgage-backed security crisis, this is what it looked like, right? And then on the left here, this is what the yield curve looked like. So the interest rates on from the 1-month treasury yield to the 30-year bonds, right? The yield on it, the interest. So this is what happened right before the crash back in 2008-9. All right, did you see that? See how it really inverts? This is when it's already falling. But what happens is the 30 and the 10-year, they go really high in the beginning. See, they went really high up here. So people buy long-term debt rather than short-term debt. So where are we right now, currently? This is what it looks like currently. Oh, shit. Hold on. Let me bring it back. This is gonna... Come on. Alright, keep watching it. This is right now, current. Alright, so this is what it looks like right now. So the 30 and the 10 is going higher and higher. And you're going to see the short-term interest rate. That's what the Fed manipulates. It's going to start dropping because they're going to cut rates. And then it's going to look just like the yield curve did before 2009-8. Alright, guys. Here's an article. U.S. expansion sets record for longest ever, although GDP has not gone above 3%. When GDP can't go above 3%, you're still like in a recession. Things are not as good as they were in the early 2000s and the 90s. It's everyone knows it. It's just that people are just taking on more debt. I mean, some people, some high-paying jobs, some people are doing much better. But it's all based on investment, which is like a lot of companies out there shouldn't exist, guys. Just like the banks who were bailed out, they shouldn't exist right now. Yeah, so my personal strategy, I'm mainly invested in, I've been selling cryptos and taking profits from that, and buying gold and silver mining stocks. There's way more upside to those than any altcoins or Bitcoin. Separate video, I'm going to talk about that. And as the stocks go higher and higher and higher, you take some profits and you buy physical while you can. Once people can't get any physical because there's none left, and believe me, these gold bugs who've been buying for decades, they're not letting go of it. They're really not. And governments and central banks have been buying it for the last 10 years as well, and they're not letting go of it either. They need it for international trade for energy and resources like oil and metals like steel and coal and stuff like that, right? So yeah, I mean, who's got it has it, and once people can't buy physical, the only thing left to buy is mining stocks. And mining stocks are going to go into a huge freaking bubble. And that's when you make life-changing money. Also, if the central banks do go to go back to a gold standard, or at least start a gold-backed cryptocurrency for, to replace their current fiat currency, things will be alright in the long run. And your mining stocks are just can keep going up for a very long time, for years. And then you could, I don't know, sell them, buy apartment buildings, I don't know, get back in the stock market, buy real things with it. Alright? So go to MMGinvest.com. I need to buy more for myself. You guys take advantage of that 10% discount. There's a video on the website. Shows you what you can expect to receive. And yeah. If you guys found this video informative, please share it. Because this video is not going to get... You have to share my videos. It's the only way my channel grows. It's the only way I'm going to stick around. Alright? Like, I barely make any money from YouTube. And if people don't purchase my stuff, there was no point in me doing this. What else? Yeah, so share it, comment, anything, leave your comments, I answer them. Smash some likes. And, yeah, guys, until next time.